the Director of Capital Market, one of our partners in the development platform, Climate Advisors. And Gabriel, can you just tell us a little bit about, I know that you're aware of some of the background and the work that was done, the announcement that we heard earlier in terms of the 44 investors. Kind of how you see that both rolling out and then the kind of impact you might expect from that kind of arrangement in your view, in the work you do in finance.
Well, thank you, John. Interestingly, so a couple weeks ago, they announced $6.4 trillion of assets under management, encouraging companies that they invest in meet supply chain commitments. That's a tectonic shift. Now, I may be one of the most mainstream people here in this room. I mean, I've spent 20 years as an investment research manager at companies like Wells Fargo, and with Morgan Stanley and American Express and others. So, but in my community, the issue of supply chain has changed completely in the last 3 years. So looking backwards at the last 3 years, we've seen the conversation on financial risk, material financial risk associated with deforestation, has gone from like something we might dream might be real to actually a mainstream conversation piece. We were part of a recent panel with the CFA Institute, which is as mainstream as one can be. We had 150 people in a room of 75. Most of them are financial analysts, and they just wanted more data because they wanted to create products. And go why? Because managing the risks in your supply chains is simply good business. If I know what's upstream, I can manage the problem before it arrives. It's the first thing. The next thing is that drives us towards, those who do not manage those risks end up with assets on their balance sheet, or stranded assets, that negatively impact the valuation. A stranded asset is an asset, then it's a liability. Think of it this way. I live in maybe Oklahoma, or Minnesota, I have a car, and I moved to New York. Well, that car has now gone from an asset to a liability because I have to pay for parking, I never drive. It's a money thing, right? So we got all these money pits out there. The agriculture sector. We're part of a really wonderful partnership with called Chain Reaction Research with Aid Environment Window. And our colleagues put together analyzed all the palm oil concessions in Indonesia. 3% of the country is a stranded asset. 30% of the palm oil landing. 30%. So for me as an investor, I want to know what's upstream. So how do I know what's upstream? Full transparency and traceability. And that's where the innovations occurred in the last year. So looking backwards, the leading corporations in the world have made full transparency and traceability commitments across many agricultural and food products because it decreases their economic costs.
Can you give us a couple of examples of where you've seen traction really gaining and where you see in terms of companies' valuations and how this kind of activity is making a difference?
That's really interesting. So my stakeholders, the people I talk to, are financial analysts. They're a really boring bunch of people. But you like numbers, spreadsheets, and be in a corner that's in the dark. Analysis. So anyways, some very interesting things happened last year. So risk has a downside and an upside. Risk is simply uncertainty. I just don't know what's going to happen, so it's risk. So on the downside, last year, Noble Group, an energy trader that has 200,000 acres of palm oil concessions in West Papua, Indonesia, we caught them and realized that they were essentially not doing the correct financial accounting for their assets. They've been doing this for 4 years. So, had a polite conversation with the CFO, and 2 weeks later, they issued a $60 million impairment.
We don't hear you.
Thank you, Wanda. They issued a $60 million impairment. Right? At that time, their market cap was about $300 million. So they decreased their asset valuation by 20% overnight because the financial accounting they're doing for their assets, palm oil, was not accurate. It was a lie. That's on the downside. So that decreased economic pressure on those 200,000 acres of forest. Now on the upside, we have two really good examples. It's a very small, boutique, very small company called NP Evans. It has trades in the London Exchange. It has, all of its palm oil plantations are certified with Roundtable Sustainable Palm Oil. So there's a takeover target. So a very large company, Kuala Lumpur Penpong, tried to did a hostile takeover. And the evidence of the right thing, they bought them off, the share price, and then they sold their palm oil, some of their palm oil assets that were RSPO certified. They sold those assets for $100 million. This all happened in 3 months. Sold their assets for $100 million. And they sold their assets for about $14,000 a hectare, which is above the market price in Indonesia. So a nice sales price. Why? Because they're transparent about their traceability. I mean, they're transparent about that transparency and traceability. Go to the website, you know where the palm oil is coming from. They'll sell it to you. They're completely transparent about the prices they're getting from RSPO. And so in the end, by holding on KLK, this very small publicly traded company had a 60% increase in the share price in about 4.5 months. Me as an investor, that's a really nice gain. And one final example, Unilever last year had a very interesting deal. They sold their baking, cooking, and spreads division. It was initially forecast at $7 billion. But they insisted, wisely, that whoever the buyer would be would maintain or improve upon their 2019 zero deforestation commitment. So they built their zero deforestation commitment, which is part of the New York Declaration of Forests, into that sales price. That sales, they sold it to private equity from KKR, not known as an environmental firm, for $8.04 billion. So they got some of that $1 billion extra, the premium associated with zero deforestation. KKR came out with a stronger 2019